All right, we are back for Shooter's Weekend Elliott Waves. That may or may not be the title by the time we post this, but that is what we are working on each weekend. Shooter will be doing an update of the major markets, your dollar, your Treasury, SP 500, QQQ, and IWM, and then a select group of ETFs and stocks. And really, what we're trying to find is the spot that we are in the market today as we prepare for the upcoming week and month. So, Shooter, how are you doing today?
Hey, I am doing awesome, man. How are you?
I'm very, very good. You asked me off air how the engaged life is going, and it's basically the same as the pre engaged life. So you can ask me again in a year and a half or 2 years or 3 years or whenever we get married what the marriage life is like. But you have a joke for me, I hear.
Yeah, that's it's the best joke ever. There's this young man. He's thinking about proposing, to his girlfriend. And he's nervous and couldn't think of how to pop the question. And it's been a couple of days. He hasn't quite decided what he wants to do. He's sitting on the sofa, and it just came to him. He blurts it out, and he says, "I think we should get married." Well, his girlfriend goes, "Wait, taken back. Are you serious?" And you know, and he said, "I think I am." And she goes, "You're proposing to me on the couch?" She asked, and he says, "Yeah, I guess I am." Now she goes, "That's not much of a proposal. I think you can do better than that." And he says, "I thought so too, but your sister already said no."
Oh, oh, wow. Yep. Hopefully, I did a better job proposing at the Grand Canyon. Good grief, Shooter.
Yeah. Hey, I couldn't resist, man.
All right. So where are we at on the S&P 500? Are we going to get one more pullback as Congress decides to go crazy?
Well, trend resistance is overhead still. That's we got to get through that before we can look basically 442.84. And of course, looking at how I look at charts, drive one, drive two grouping. This is drive three. So yeah, it could be an overshoot. So we could probably push up to August 21 resistance and then get some rejection there. However, the counts are extending. I'm excessively more bullish than I was 2 weeks ago. A lot of the internals are there. Much like the video I did earlier this week on the Magnificent Seven, a lot of that was because what I was seeing there. We're getting that FOMO in that as well. So, the one spot, we got some decent rejection here at the 8-day. Notice how we put in this prior high here, in later October. And, we came up and tested that same point and then got a decent rejection off of that. So, that's sort of a crossroad I'm watching a little bit. It's still a little bit of a moody market, but I think we're heading bullish and, barring any event that comes out of Israel.
Right. So if we get a pullback because the House of Representatives shuts down government for a Thanksgiving vacation,
100 day.
So
I would say fills our second gap.
Okay.
Gap fills are good, especially double gaps are really good spots for bounce. So, I would be stocking that for an entry if we get it, because that, unless it flushes right through it. There's usually two ways you get a gap fill. It grinds down to it, or it slices right through it. When it slices right through it, then it meant nothing.
All right. So my prediction at the start of the year is that we basically have a round trip year. It did it differently than I thought it would happen. It went up and now it's come down. I thought it would go down and then come up. And you see your red trend line down there. So is that really, barring World War III, is that 400 range probably about the worst you think it could get?
Actually, no. We've got, our 375.84.
Okay.
Is what I have as trend support on the weekly. Jumping out to the monthly, you can sort of see where those bands are. It's stepping up. Just like we step down in a staircase or an escalator down, we step up in a staircase as we're going up. So, what I would like to see here for the plus side, notice how we were shallow on our retrace here on our super cycle wave 2. We were shallow to trend support, didn't quite tag it. I would have much rather had a tag, but we didn't get that. But that's also bullish. So if we're going to stay bullish, I would suspect that our slope increases up here quite substantially going into that cycle wave 3. Now, one thing with that cycle wave is it's a tad bit longer, but they could extend substantially from that point. And I've got to hold the chart down to 1 second. I got everything locked, so it's not letting me. But this, I mean, we could push right up here to the 78.6. There would be nothing that would prohibit that in a euphoric market. You look at our prior slope, this right here. If we get, Fed pauses at the next FOMC, Israel's calming down, there's a lot of money coming off the sidelines right now.
Yeah, there is a lot of money on the sidelines right now. I mean, there's a normal amount of money market money, right? There's always a trillion or 2 trillion, I forget what the number is, but there's always a certain amount of money just sitting in money markets, and we're way over that right now.
Yeah.
So
been flat to just slightly negative, with the exception of the Magnificent Seven. Couple of days last week, we got a little bullish. So it's the first time we started to see that line popping up in the green arrow, which is constructive.
Okay. So excluding anything horrible, we stay above 400.
Yeah, I would think so here.
Okay.
Yeah.
And if we get a pullback towards 400 because of the House of Representatives shutting government down and people throwing a fit, that's probably something we should buy.
Yeah. I mean, the only drawback is this sort of look here. Right, we've talked about that flat, but PC is still possible down to 327. As we progress further into this and as we absorb more and more bad news, jobs data wasn't bad. Even the housing delinquency numbers aren't bad. The unemployment numbers weren't bad. It looks to me like we're going into a growth phase. That's what I see outside of the Israel war, which is really the biggest monkey on my back with getting extremely bullish here. I think we're bullish.
Yeah, I tend to agree. Barring something really bad, I think that the path of least resistance is up. That's uncommon for me to say. At least it has been the last couple of years. So I think after 2 years of being, basically bearish to neutral, I do think that next year we see new highs. One of the things that I would point out to people that I don't think they understand is they hear all about the credit card debt getting to a new high. Well, however, over $250 billion of student loan debt was forgiven between August and September. And I don't think the people understand that. So that's really, if you take the aggregate debt number for households and you wipe out $250 billion of student loan debt, how does that look? And the way that they did it is that anybody student loan who is basically over 25 years old, they forgave. So the combination of paying it back plus deferrals plus forbearance, if it equaled 25 years or greater, your loan was forgiven. So that's what they did. And that means that a lot of people in their 50s and 60s who had student loans suddenly don't anymore. And a lot of those people are in their peak earning years, and they are, and I know this as a financial planner, they would like to accelerate their investment for retirement. So a lot of that money and a lot of that $250 billion is going to end up in the stock market over the next year or two. And, so if they were making $400 or $500 or $600 a month student loan payments, that's all money that's going to be going into the stock market. Yeah. That is a big deal. Now,
plus China's printing too. They've been putting a shitload of money in as well. So,
yeah, and that's something that I'll talk about going forward, because as much as I don't want to invest in the commie stocks, it looks like there might be a reason to invest in the commie stocks. All right, so do you have QQQ as well?
Yep. Okay, we're about ready to get this new breakout at 387.98. That measures to 476. That is much more euphoric than the S&P at this point. I think the same flight to quality is the MO here. I think that continues. And until we see some reason for that to start lagging, I'm pretty much every one of the laggers, here again referencing my Magnificent Seven video earlier this week, just Nvidia is the only one that looks like it might roll over.
So in general, the Magnificent Seven are starting to look bullish again after a pullback.
Bullish, except for, Nvidia is still bullish till it puts in that 489, I believe it was, and then it's going to turn south a little bit. But otherwise, all of them are legging up, look really positive. Microsoft all-time highs. and we're still measuring a little higher. That has potential to extend. Same with Apple. Apple came back aggressively even after the China news. You could see the options, the flow being bought in those. I mean, just been aggressive the last 2 weeks.
Right. So I hope folks have just caught that, is that QQQ continues to be stronger than the S&P 500. And we pointed at that earlier on the Investing 2020s program, that SPY has perpetual outflows and VU has perpetual outflows because the institutions, mainly the pensions, have to redeem investments, which are mainly in large caps, to pay the pension payments to the boomers. And there's, not new money coming in because the people younger than the boomers really don't have pensions. So that large cap space, that broad S&P 500, I think it's going to be weaker than QQQ forever because that's a more focused index. Can we take a look at IWM?
Let's jump to the Dow first. And even though this is the weak sister to a great extent, I also think it has the most upside here if we get the FOMO in the market. So that's what I'm watching. We get above that January 2022 resistance at that 362. Our primary wave 3 is up at 390. So I think it, it's just been in this flat. If you go out in time, it's been there forever, this flat. So we get that breakout up here right around 369. This could measure aggressively higher from where we are. Even though I don't necessarily like the fundamental reasons for that. But, here again, looking at an extended wave 3, or, we're looking maybe 460 on the top side, I would think.
All right. Here's where I put in my obligatory double warning. First off, the Dow Jones Industrial Average is a crappy index.
Agreed.
Second, unless you are trading on the weekly with Shooter over in the Rare Investing chat room, you can ignore the Dow Jones Industrial Average, and it would be healthier for you if you did. All right, moving on to the small caps.
Okay. Well, the Russells is the only bearish one in the bunch.
Yep.
Okay. Our last entry short was at 175.65. We're still looking for 147.
Okay.
Got some pain jumping out to the weekly to, give you more of a visual. This is a downtrend, 5-wave down. Actually, I've got to step out further than that to even see it. We're ultimately looking for a target down around 113.35, which suggests financials are not going to join this party.
I think that's a function of liquidity.
And
we'll see what liquidity looks like after quantitative tightening is done.
Yeah, but at least for the next 2, 3, 4, 6 months, I think it's going to be bearish.
Okay.
I mean, we had a nice pop, last week, but I don't know that it holds. It's just too consistent. Lower high, lower high, lower high. We've got to break above that 198 for that thesis to really change.
Okay.
Yeah, let's take a look at TLT.
Actually, let's go back to IWM for just a second.
Go.
One of the things I think people have to remember about IWM is that it's a big index, right? It's 2,000 stocks. It's not an efficient market, which is why you should never buy IWM either. Small caps and micro caps are where you have to do stock picking. So the fact that institutions are probably selling this one and retail investors don't know any better to invest in small caps, picking stocks or indexes, I just think that this is also a deficient index that you can ignore, other than, I guess, when it has sharp rallies on huge liquidity up events. Other than that, you got to pick your small caps. All right, TLT.
All right, great. We came in shallow on our wave 4. Looks like that's done, our intermediate wave 4. So now we're looking for about 83.35 from where we are now. We were originally looking for around 95 to 97, but it looks to me like it's going to continue lower. Now, I question whether or not our 80 is going to be the bottom here. We're confirming on RSI, so we got a nice divergent low here. So this is a drive 2. So it does look to me like we're going to put in a drive 3 down here with that 80. But the question is that going to be the low? Now, we really need to jump out in time and, sort of see our historic low is 80.91. So whether or not that holds or not, I still think that's yet to be seen. Our RSI has never been that low, down below 30. So I guess it depends a lot on what they do with the treasuries here.
So let me ask a question. Let's suppose that the House of Representatives does the shutdown, and part of the deal to get rid of the shutdown is that the government actually does reduce the growth rate in spending. And suddenly, rather than having a 7 or 8% deficit, we go down to a deficit that's only, say, 5%, which is what I've heard the number is going to be, what I've read the number is going to be. If suddenly we have a sharp reduction in the deficit and everybody can see that the changes in tax rates in a couple of years, that, the sunsetting of some of the Trump's tax cuts is going to bring that deficit down to 2-ish, 3-ish%. Suddenly that means the dollar gets a lot stronger and interest rates probably come down weirdly, right? It would be one of those situations. Yeah, it'd be one of those situations where I think the dollar stays firm, which has been my long-term thesis, because the economy and the budget both get healthier, but then demand in a healthier U.S. Treasury market, which the banks are probably going to be included on as QE comes to bail out the commercial loans, you're going to see interest rates come down at that 10-year to 20-year level. I do think 30 stays about the same and somewhere in the 4s, pushing 5. However, if interest rates at the 10 to 20-year range come down a point, then that means that this is going to shoot up quite a bit. Where's your target for a 1% lower interest rate?
To be honest with you, that's probably beyond my pay grade. At least right here this second, I'm not grasping what that would mean. But I can surely dig into it and raise it next time we chat.
So what you're going to come up with is about a 20% immediate jump in TLT and then whatever FOMO there is after that. So that would mean that you're looking at
110.
Yeah, you'd be pushing that first target at 119.
Timeline, do you think?
I think it happens quickly. I think it happens by spring at the latest. But I think that it could have one of those giant weeks in December where it jumps up quite a bit.
Yeah, I think the bottom could be in as quick as later November, December, maybe. I think this comes off pretty quick if we do.
It coincides with I think this is the market telling us that it expects something out of the shutdown that's positive.
Okay. Let's look at the dollar.
I think this is the end.
Yeah, actually, I'm glad you raised that because that, I think my question off of that is at 87 and being that we have a lower target of 80, is that worth cash secured puts around 80?
So I think you can sell cash secured puts now if you really want to. I haven't been. I own TLT for 2 reasons. I got it in the 90s and it is there for 2 reasons. One, I think everybody knows that interest rates can't stay this high because the governments can't afford it and the banks can't afford it. And I think that it's obvious that the hedge funds with all the leverage, your Bill Ackmans of the world, were part of pushing this down. You see that area right around 97, 96, right in there, that pink zone. Yeah, that is probably where we should have bottomed out based on interest rates. But the market, is the market. It can push things around higher or lower that don't technically make sense on fundamentally don't make sense.
Notice we went right to that 82.53. That support.
Yeah, and that's
right to it.
And that's price, but it's not value, right? Yeah. So price is what you pay, value is what you get. The value of TLT right now is somewhere in the middle 90s, but it's trading below that. So that's the easy money back up in to pushing 100. And I think as interest rates come down, you're looking at a price, somewhere between 110 and 140. Hard to know. I think 140-ish we'd probably really have a crisis of some sort. So that's why TLT is a hedge. If the Fed really has to cut aggressively rather than just, a couple of tweaks next year, I think that they're just going to have like 2 rate cuts next year of, a total of 1.5, give or take.
I think it's still early, but those January 2025 110 calls are dirt cheap.
Yeah.
If that would be the trader narrative.
Yeah.
Trying to, because if we only go, they're still in the money at, 95.
Right.
It goes to 100, they're doubles. So right. That's just my thought.
Yeah, I think that if you are in the rare trading chat room, I think that this is the hedge that you should be engaging in. I think you should be buying TLT or TLT calls, because if things get bad and the Fed has to cut, your upside is pretty tremendous. It's basically the opposite of the trade from 110 down to the 80s. It's just the other side of it. It's the right half of the V.
Yeah. I mean, and it's pretty much guaranteed play as soon as it manifests, just how long you got to wait. Right. So, it's like a scale kind of thing. You want to position on, but you want to add like maybe every month or every quarter if the events haven't happened kind of thing.
Right. Based on what we looked at in the Investing 2020s webinar, bank stress is going to get high enough in Q2, just like it did last year. I mean, there's a reason why it happens in Q2. With 5% of commercial loans not getting paid right now, they're going to get to those 90 and 180-day magical marks where they start handing keys back to banks. And that's going to be when the banks go to the Federal Reserve. We need a hand. And that hand is going to be some quantitative easing, right? Another shot in the arm like they did last spring. Even though their QT is the policy, they'll have the QE that they don't call QE. And, what did they call it? A special facility last year. And then they'll say, okay, and by the way, we're going to fix the yield curve by lowering the Fed funds rate 75 basis points this month and maybe again next month. And then it'll be done. I don't think you're going to see the Fed funds rate in the ones, probably not even in the twos anytime soon. But, it's at 5.5 right now. Getting it down to 4 or in the threes maybe, I think would help the banks tremendously, which in turn helps the U.S. Treasury market. So I think that this is a pretty interesting trade in general, just because it's bottoming right on a technical side. But I think it's also a fantastic hedge against something that we know is coming, which is bank stress because of the commercial real estate loans.
It'll probably be the trade of the year next year in 24.
I think it might be.
All right, well, let's look at the dollar.
Let's do that. Hey, who's that guy that way down there at that V said that the dollar was going to go on an extend bull market? Hey, my thumbs are pointing at me. Yeah, I mean,
Kirk's head.
Well, yeah, I mean, I thought it was clear in 2012 and 13 that the dollar was going to rally, and all the headlines were the opposite. So now, I went on Forex Analytics and I said when the dollar was at like 112 that it was going to come down to around 100. We got there, right? We were almost there. I think we actually did we touch 100 for a hot minute.
All there. Went the 8-day on mouse or stick.
Yeah. That pink box that you have there, to me,
99.22 was the low.
Okay. So to me, that pink box that you have there, I think the dollar could be in there a lot, right? It might go outside of it, but I think it's going to trend back to that pink box for a very long time. I mean, like a really long time, like years and years and years. I think the dollar is going to chop along around 100, maybe 10 in either direction, pretty regularly. I think it's actually going to be a hard market to trade. But I think it points to two things. One, U.S. strength. Two, that the budget's going to suddenly stop getting worse. And three, what the hell are the alternatives?
Yeah. Well, that would need to, for us to continue higher, this needs to become an ABC where we are now versus the impulse wave that we're seeing with the AI. The impulse has it going down.
Yeah. And I've said, I think 90-ish, 80s, whatever. But that's really bullish that's super bullish for stocks if it does that.
Yeah.
I would expect, remember, this is the dollar bull saying this. I think the dollar comes off. I think you see it in the 90s for a while.
At least trend support here.
Yeah.
I would think that.
But long term, it's going to go gravitate back up again after that.
Yeah.
So just understand that in your long-term outlook.
Yeah. Now realize too that 96, that manifest, we're extremely bullish indices.
Yeah.
That's one other thing I wanted to go in. Well, actually two other things. I wanted to go over the VIX here just for a second. Now
that's mind-boggling to me.
What was that?
How low it is.
Yeah. Well, actually they're using the VIX to push the indices. It's a mechanism now. I don't really, that's the rumor anyways. But my point here is that we have a confirmed low and a divergent low, so it's 2 drive, and we're bleeding on the 8-day. So wherever we put in this next low, we probably do get a bounce. Now, that bounce is most likely, just looking at my thesis on equality, A equals B and C equals A. So, that means by January 24, we should find our bottom, and then we get a bounce. And the most likely target, at least from our low here, is 68, if we got it today. If I bring that down, and let's say we get our low here, our low is, we should come in around 56. So, that's sort of my thought on what I see there. So I see an event coming. I just can't tell you if it's between now and the end of the first quarter.
Yeah. So, that actually plays into my thoughts about when the banks are going to have a problem.
That would be a catalyst. That would do it.
So if you're a swing trader, I think you can look for a VIX trade sometime in Q1 as well, on the idea that you're banking on the banks having a headache.
January 25, 50 calls should be cheap.
Right. And remember, what we're looking at right now is the ETF or the ETN. If you flip over to the VIX index, it's different, right? Because
it's a little different, but from a trading perspective, we want to look at the VIX.
Right. The ETN here suffers from deterioration because of the roll. The VIX index, anytime, do you have that handy? Anytime the actual VIX index gets down to that 10 to 12 range, it's like an automatic buy. So I don't know. I actually haven't looked at it in the last week or so. There you go.
All else fails, go to Google.
Yeah. So where is this right now? So it's down at 14 and change.
Yeah.
If it gets under 12, now suddenly that's where VXX becomes important. So you actually look at VIX in conjunction with VXX because it tells you where the actual volatility levels are. The last time I traded VIX super successfully was way back in 2018. I got that spike there. We made hundreds of percent in a couple of weeks. I should have traded it during COVID, and I did not. I know that you did. But VIX is a hard trade.
It is.
So
it's gotten more challenging too. That's for sure.
Yeah. So I Charlie Munger VIX. I just, I like looking at it, but I don't like playing with it.
I like it at 690.
Yeah. Okay. Well, let's keep an eye on it.
Yep. All right, let's take a look at emerging markets. Wanted to look at that.
All right.
We've got a new primary wave trigger that just happened on this low.
Okay.
Which is good. You get that stair stepping. Those triggers should keep blowing to the upside. Once we break above this 42, China's got a shot at 51. So, as long as we don't close below that low, which is 141.30, I think, as long as it doesn't close below 36.38, should be good. So that, my stop would be at 36 if I was going to try and trade that long. Right. But I noticed that it was, the nice base. In fact, the next trigger blew, nice divergence on the flat. We're above the support band from June 26, the Great Recession low.
Okay. So I think that, the thing to keep in mind with emerging markets is, one, we don't use this index. It's not a great investable index, but there's other ETFs that we can use EEM as our trigger to tell us when to make the trade, but then there's better ETFs to actually buy. So subscribers know what those ETFs are. In fact, the monthly ETF report is a little bit late, so that'll actually be out.
Okay, cool. Well, so you have questions about anything else?
No, I think that covering the major markets here, I think that gives me an idea for what we're going to call the weekend report. I think that there's a lot of good ETFs out there that we're finding the spots. And then if you are a subscriber to Fundamental Trends Rare, and you can get a taste of what Shooter is doing with the YouTube $1.99 a month subscription, you can get the stocks that he's talking about this week. So, Shooter puts up 3 or 4 quick YouTube videos during the course of the week. And those are, those cover some of the stocks. So if you want some of the stocks that we're actually investing in, subscribe to the YouTube channel for $1.99 a month to get a taste. And if you like the way it tastes, you can buy the meal at Fundamental Trends Rare Service. Thank you very much, Shooter. I think that this actually is the perfect way that we should do this every week. What do you think?
I think it worked great.
Yeah, I think covering the major markets is the way to go. How about the weekend major markets review?
Sounds good to me.
All right. We'll come up with a catchy name. We're having a hard time coming up with a catchy name for the weekend report. Maybe it should just be the weekend report, and everybody who looks up Saturday Night Live
Well,
will get us.
something said for being cut and dry and simple too, so people can find it.
Right, right. Well, I think maybe we'll call it the weekend report just so we get the Saturday Night Live people. All right, all right. You take care. Have a
Thanks
great
for having
weekend.
me.
Yes, thank you.
All right, be well, everyone.